probably by the end of next year, we'll be paying more in interest on the debt than we're paying in Social Security. And where's all the money going to come from to pay that interest, as well as fund the operating deficits? They're just going to print it. And so the dollar is going to get killed, and the price of everything is going to go up. If you thought we had bad inflation last year, wait till you see what's coming. And it doesn't even matter who wins the White House. Inflation's going much, much higher, and the gold market is eventually going to figure this out, and then gold's going to even outpace inflation because people are going to be looking for an inflation hedge. They're going to see this freight train coming, and they're going to try to get out of the way, and they're going to try to protect their purchasing power, and they'll do that by buying gold.
Gold paused on Friday, trading within a narrower range, with a high of $2,762 and a low of $2,733, closing near the day's lows. This inside day pattern, where the trading range fits within the previous day's range, often signals consolidation but has bearish undertones, primarily as the price remained in the lower half of Thursday's range. Additionally, a developing bearish shooting star candlestick hints at potential downward pressure, though it's not formed at the peak of a strong trend. Gold clings to modest gains just above $2,750, suggesting cautious sentiment heading into the next trading week. Commenting on gold's recent performance, PeterSchiff notes that 2024 marks a critical juncture as gold has decisively broken its long-standing resistance level of $2,000, setting the stage for another solid upward cycle. Reflecting on prior rallies, Schiff suggests that this move could ultimately propel gold's price to 6 times its current levels, potentially reaching $12,000, with possibilities for even greater highs. Meanwhile, mounting U.S. debt levels contribute significantly to the case for gold. Gross national debt has surpassed $35 trillion, putting federal debt held by the public at around 99% of GDP, a ratio unseen since the end of World War II. While post-war economic policy gradually reduced the debt to about 31% of GDP by 1981, today's environment is vastly different. Schiff underscores that the U.S. now faces an annual deficit increase of $3 to $4 trillion, with interest expenses on the debt nearing $1.1 trillion, soon expected to eclipse Social Security as the second-largest federal expenditure. With fiscal challenges persisting, the U.S. will likely continue relying on money printing to manage rising costs, which risks weakening the dollar and accelerating inflation. This makes gold an increasingly attractive hedge against currency depreciation and inflation, drawing interest from investors focused on preserving purchasing power in a volatile economic landscape. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think there's an explosive opportunity here where people are paying attention to the NASDAQ. They're forgetting about what's going on in gold. They made the same mistake, in 1999, 2000, when everyone was buying .com stocks and gold was under $300. And the gold mining stocks were ridiculously cheap. And then the bubble burst and, gold went from 300 to 1900. And you got a lot of 5, 10x moves in the gold mining stocks. I think this is going to be an even bigger move. I think we'll make more than 10 times our money in gold stocks, maybe a lot more than 10 times our money. And right now, we're on track, 2024. We're on track for the biggest gain in gold since 1979. That's how rare a move this big is in 1 year, and nobody is covering it. But the big difference is 1979, that was kind of the end of the move, right? Gold peaked in 1980, and it went from $35 an ounce to $850. And there were gold stocks that went up 50x, during the 70s, maybe some, there weren't even that many around. But this, I think, is early on. We just started this bull market. This is the first year, because we had the first leg, right? We had a bull market from 2001 to 2011, right? That's when gold went from 270 to 1900. That was a big bull market. Then we entered into a bear market, consolidation, where gold went from 1900 down to 1000 and then back up to, 1600, traded sideways, got back up to 2000, back down. But really from 2011 through the end of 2023, early 2024, gold went sideways. But what it did was form a huge base. And the resistance was around 2000. And we didn't really break out of that until this year. So we just basically left the launch pad, and now we're at, almost 2,800. But I think this move is going to be at a minimum proportionate to the move that preceded it. So gold went up about sixfold to go from 300 to 1,900, right?
Right.
And so this move should be at least sixfold, which is 2,000 to 12,000. So kind of at a minimum, you think gold is going to go to 12,000, but I don't know why it would stop there. I think it's going a lot higher than that. And again, it's not that gold's going anywhere. They're going to print a ton of dollars. We've got massive deficits in the United States. We're running about $1 trillion, every 4 or 5 months of debt. So we're adding like 3 to 4 trillion a year to the national debt. Interest is now $1.1 trillion a year. It's the second biggest line item in the budget behind Social Security. Probably by the end of next year, we'll be paying more in interest on the debt than we're paying in Social Security. And where's all the money going to come from to pay that interest, as well as fund the operating deficits? They're just going to print it. And so the dollar is going to get killed, and the price of everything is going to go up. If you thought we had bad inflation last year, wait till you see what's coming. And it doesn't even matter who wins the White House. Inflation's going much, much higher, and the gold market is eventually going to figure this out, and then gold's going to even outpace inflation because people are going to be looking for an inflation hedge. They're going to see this freight train coming, and they're going to try to get out of the way, and they're going to try to protect their purchasing power, and they'll do that by buying gold.
Gold again surged, echoing its performance during the inflation-driven 1970s, when it was the hottest asset of the decade. However, unlike the metal itself, gold mining stocks have lagged, prompting many to examine their potential as an inflation hedge. PeterSchiff notes that, unlike typical bullish runs where investors exhibit a fear of missing out, today's gold mining sector is dominated by caution. Many are hesitant, fearing a sudden downturn with each upward tick in gold's price. This sentiment reflects a climate of worry in the mining sector, with an absence of the greed and speculative excitement usually seen in bull markets. Though gold mining stocks have risen alongside gold, their recent performance has been less impressive. Surprisingly, these stocks may offer a stronger inflation hedge than gold itself. Historically, mining stocks have not fully kept pace with rising costs. Over the past 3 decades, while the U.S. Consumer Price Index has more than doubled and gold prices have risen sixfold, major mining companies' Philadelphia Gold and Silver Index, XAU, has only increased by around 40%. This benchmark remains well below its peak in 2011, even as both U.S. consumer prices and gold have grown by roughly 33% and 55%, respectively, since then. In today's inflationary environment, gold mining stocks may hold untapped potential, yet despite their theoretical appeal as inflation hedges, their historical performance suggests investors should proceed with tempered expectations. The ongoing disconnect between gold prices and mining stocks highlights an unusual opportunity and risk in today's market. Let's get back to the interview.
As we're talking, gold's about to go through 2,790. It's at a new record high as we're speaking.
Yep.
But to just, look at what's going on, silver is still down on the day. It's having a pretty big down day. It's down about 55 cents, which is a decent move, 1.6, 1.7%. And the gold stocks, look at the big gold stock indexes. GDX is down 1.5%. GDXJ is almost down 2%. 2% with gold up $15 at an all-time record high, just under 27.90, and people are selling gold stocks. I mean, I've never seen a bull market with less conviction. You have irrational exuberance everywhere except gold mining stocks, where you have irrational pessimism. They're afraid. Every time gold goes up, they're afraid it's going to crash. There is no fear of missing out here.
Yeah,
right?
Talk about a wall of worry.
It's all fear of losing money. There's no greed anywhere in the gold mining sector. I think Trump is most likely going to win. I've thought that even from before Biden's had his debate. And when they brought out Harris and they tried to hype her up, I didn't think the public was going to buy what they were selling, that she was a flawed candidate. So he's probably going to win. And the market knows that, and price of gold keeps going up anyway. So, I don't think that a Trump win is going to cause gold to go down. I do think that if Trump wins, it may cause U.S. investors not to buy gold because most of the gold buyers are Republicans, and they really they stopped buying gold when Trump was elected the first time because they believed that, hey, he's going to make America great again. He's going to do all this great stuff, so I don't have to worry and I don't have to buy gold. And of course, he didn't do anything that he promised. The budget deficits went up. The trade deficits went up. He didn't drain the swamp. The swamp just got deeper. We just continued, to pursue the reckless deficit spending that we had under Obama. And I see nothing that would change that other than a crisis. But Trump is not going to accelerate that crisis by doing the right thing. I think it's going to be more of the wrong thing. But there will be a lot of false optimism that Trump's going to actually do something constructive. Now, he may be less destructive than a Harris administration or whoever is going to end up pulling the strings behind the scenes, because I don't think she has a clue, what to do about anything. I think she's just going to do what people tell her to do. But the people that are telling her what to do are not going to be telling her the right thing to do. So I think gold goes up no matter what. But I think people will be more interested in buying gold if Kamala Harris wins. Certainly my clients at Schiff Gold will want to buy more gold because they'll be more worried with Kamala at the helm. But maybe gold would sell off if she won initially, if gold's been rising based on the idea that Trump is going to be more inflationary than Harris, which I think is a stretch. I mean, even if Trump increases the deficits with his tax cuts, she's going to increase the deficits by probably more with her spending increases. Although Trump's going to spend more too. He spent more the first time he was in office. He just spent less than what Hillary would have spent. And Harris is going to spend more than Trump. But either way, it's going to be financed with a deficit.
The current dynamics in gold and mining stocks reveal both potential and caution for investors looking to hedge against inflation. While gold continues to show strength, mining stocks have yet to fully capitalize on this upward trend, underscoring a divergence that presents both opportunities and risks. The cautious sentiment within the mining sector may indicate room for growth, but historical performance suggests that these stocks might not perfectly track gold's rally. Gold remains a robust option for those looking to preserve wealth, while mining stocks could offer additional exposure, albeit with more volatility. Given the historical underperformance of gold mining stocks relative to gold itself, how would you assess their role in an inflation hedging strategy today? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.